Hey traders, Akil Stokes here, head currency trader with Trade Empowered, and well, it's a beautiful day out. Probably gonna hit the greens for a little bit, but first, I want to get out to you this week's weekend review video because, well, it's been a pretty awesome week of trading, and usually with that comes some pretty powerful lessons. So sit back and enjoy this week's video. All right, traders, welcome back to another weekend review video, and thank you for joining me. Once again, my name is Akil Stokes. If you're new, I'm the head currency trader at Trade Empowered. I am also a contributor to the Six Figure Syndicate program and moderator of the FX Ratio Live Room. I do a lot of things. In today's video, I have a lot I want to talk about. We're going to mention a little bit about the rule of threes. I know you've heard Jason and I mention that before, mainly in we talked about it in the Turning Point presentation we did, what was it, back in May. But I also want to talk a little bit about money management. I guess I'm going to show you guys a little bit of my track record over the last couple of weeks at the end, and not necessarily to show you the returns or whatever, but what I look for in my trading when I evaluate myself. And this is based off a conversation we had in the live room today about win percentages and just money management in general. So we'll talk a little bit about that at the end. But mainly, I wanted to show you guys and really walk you through the psychological side and the technical side as well of what I like to call a breakthrough trade that we had this week. And it wasn't a breakthrough trade for me personally. I've had mine, but it was a trade that was very similar to the breakthrough trade that I had years ago that really gave me the confidence that I can be a successful full-time professional trader. And this trade came on the Aussie CAD. If you're in the syndicate, you've seen this already, or I brought it up to you. If you follow me on TradingView, you've seen it as well. But I've been reading the comments and getting emails and all types of messages about this trade from traders that took it and saw it towards completion. And it just reminded me of that one trade I had. So what I'm going to do is this. I'm going to start off by showing you the video that I gave to my syndicate members on Wednesday? I think it was Tuesday. Show you the video that I gave to my syndicate members on Tuesday. And this is just to show you my initial thoughts, because it wasn't, the trade didn't happen at the first time. I had an initial idea. It didn't go the right way, but then there was a second chance. So I'm going to take you over to this video. It's called What to Watch Over the London Session. Again, this was, I think, a Tuesday night video I did for syndicate members, and I'll be right back to take you through the second part of this trade. Aussie CAD next. We had the pattern last week on here, so don't ignore this Gartley pattern right here. This is already completed. We've already hit targets. This is the only structured trade on my radar, and I probably won't get a chance to get involved in this tonight. But something I did notice was that just look at the ebb and flow of the market. We've been essentially just creating higher lows, higher lows as we kind of been just grinding up to this level. And this is the first time that we've gotten a break and close below our previous lows in a while. Again, just looking at, come on, one right here, higher low, 2, 1, 2, 3, 4, 5 higher lows in a row, and then a break and close below. So and this level has held that 102, even handled that 102.10 area. This is, it's held thus far. So for structure-based traders, if we get a retest up to this area, there's a nice little kill zone up here. Now you're gonna have to pay attention to price action. I'd certainly pay attention to that RSI, see if we go overbought in this area. I really don't have much to draw fibs out off of right now. So the only clue I have is previous structure, which is going to come right here about 102.10. But this is something to keep an eye on for price action traders looking for that candlestick formation, maybe a double top in a lower time frame, a lower low, lower close, a pin bar, something like that, for a chance to catch this, to take this short. Think of it as sort of like a 26.18 type trade without the double top though, but that break and close below structure and then a retest in the previous structure, which we're hoping is going to be an outside return followed by a new structure low. So keep an eye on that tonight. If you guys are actively trading during the night session, I'll be taking a peek at it tomorrow. Lastly is Euro New Zealand. So as you can see, initially we used our skills of reading price action, reading a price chart, basic structure analysis to define what our overall view was of the trade. Again, IPDE, very important. Identify, predict, decide, execute. We identified what was going on. We made a prediction, and when I say we, I mean I made a prediction on what I thought was likely to happen next. The next was D, was decide how I'm going to enter the trade, and that's where that trade didn't go my way too much at first. I'm a pattern and a structured trader. With patterns, it's easy. I put a limit order on the pattern completion, wait for that limit order to get filled, and then boom, I'm in the trade. Structure, though, because it's a little more dynamic, I often like to watch price action and get a sense of what the market's doing and how it's reacting to certain levels. So rarely will I enter a structured trade overnight, just because I'm not going to wake myself up every hour or every 4 hours to watch the close of each candle. I tried that before when I was starting off, and it just brings more stress than reward. So what happened was the trade actually completed, or what my prediction completed, meaning the market moved in that general direction overnight, but I didn't get involved. So here's what I did the next morning when I did my morning analysis and got an idea for what happened during the first half of London. And right now you can see I'm on tradingview.com. If you don't follow me on there, you should. If you click, just go to the homepage, go to top authors. If you go to either today or week or month, you'll find me on there, because I'm sort of a big shot. But click on my name here, and what it does is it gives it'll give you a list of the trades that I post to TradingView. Now, I don't use TradingView often. I may post one trade, every 2 days or something like that, or something is really cool. But I've actually the last couple have been pretty well. I got a comment from one guy that says, Akil, I've been following you. It looks like you're about 80%. And I had to respond. I said, look, I appreciate it. I'm not an 80% trader, but he's just seen the last couple of posts I did, starting, here on Euro Yen bat pattern. We looked at that, and then we called second targets at right shoulder. Boom. Price action came right down to there. How cool is that? Going back to the pound New Zealand patterns. We take a look at that. We hit this triangle to see what actually happened after the prediction. Boom. Rolled over. And the same thing goes for our Aussie CAD position. Now, here's the trade that we originally looked at in that syndicate video. And what I saw the next day when I came into the market was a potential cipher pattern. We had the same analysis of higher lows, and then a break of structure to the downside, so that new structure low. And what happened was, as the market was ebbing and flowing, as it often does, this is why harmonics are so great. As the market was ebbing and flowing, we actually set up a potential cipher pattern. Now, I wasn't interested in the cipher by itself. It didn't have too much of a reward for me, but because my analysis already had me in a bearish mindset, so I already had that bearish confirmation bias, I asked myself, or I used the skills of advanced pattern recognition, seeing that advanced pattern to enter me on the side of the trade that I wanted to be on. So we can see we had the cipher projected right up here. I predicted two levels: one, a retest of structure, and then second would be down here at another cipher pattern completion. So the idea was to take this short down to the cipher, take this short off the smaller cipher, down to the bigger cipher, stop in reverse, and then trade it back up. And when I click this button, you'll see that the first half happened pain-free, and then the second half got a little rough. And this is when it becomes an awesome trade. So check this out. Boom. Price action rolled over. Not sure if you can see all this. Let me go to a different one if I can clean it up for you. Price action rolled over, hit our cipher pattern, got long, and this is where it brought us through a little bit of pain. And this is where really that rule of three come in handy. Again, if you watch the Turning Point presentation, Jason and I talked about it, but just in general in life, not just trading, we're looking at the rule of threes, meaning things happen in threes, the holy trinity, a stoplight, yellow, red, green, everything you could think of. The brain likes to work in threes because it's really easily for us to separate and categorize things when they're coming threes. And the same is for trading. And the three main parts of trading, I've got notes down here if I remember them right. The three main parts of trading are going to be knowledge, education, same thing, knowledge, system, and psychology. And this is a great example of here. First was knowledge, the knowledge of price action. How does price action move? That's what enabled us to make our initial prediction on this pair. Just knowing, having a knowledge about the market, the ebbs and flows of it, what lower low, lower closes mean, and blah, blah, blah. System is the actual strategy or the technique that we have to enter a trade. It's one thing to make a prediction, say, oh, I think the market's going to go bearish. IPDE, identify, predict. But when we get to that D, decide, we actually need a tool or a strategy technique to enter the market. And that's where that system's going to come in handy. Boom, advanced pattern recognition. We want it to be bearish in the market. We have a system in place, advanced patterns, cipher pattern. That's our tool to getting in that trade, to executing that trade. And then the last part is psychology, because we all know how, we all know the problems that psychology can get us into, and we go over that. We go over that a lot in the live room. We go over that a lot just week to week in this video. And I actually want to read you one thing. It was on my blog a couple weeks ago. Let's see if I can bring this over here. And it's going to help with psychology. It's one thing, categories. Where am I? Follow Pro Trader. Scroll down to here. It was a post I wrote called What Makes a Successful Trader. And I've been reading Marty Swartz's Pitbull book, and there was a section at the end of one chapter that really caught my attention. It says, planning, and this should be an only in here, planning is the only objective part of trading. So it says, start with the worst case scenario and work from there. You will never be more objective than before you execute a trade. Once you're in a trade, emotions take over, so your plan must be in place beforehand. And what I take from that is, again, our job in when we do technical analysis is to trade and execute what the chart shows us. Before we enter a trade, we need to know three things. There we go. Rule of three again. We need to know three things before we enter a trade. We need to know entries. We need to know stops. We need to know targets. And those are going to be based off what we see on the chart. We want to know all of that before we get into the trade and be able to decipher whether this is an opportunity we should be involved in or not. If it is, we execute the trade. If it's not, we stay out. Now, once the trade is triggered, our job is to stay away. Aside from some trade management techniques, our job is to stay away and not make any moves. Our job isn't to, again, get scared out and keep rolling stops back. Our job isn't to get worried about not hitting targets and take a target for 10 pips when we should be shooting for 50. Our job is to stick to that initial plan. Again, with the exception of trade management, that's a different story. And this was a great example. If I hit this button, you'll see price action shot like a rocket all the way down. If you're trading this correctly, you shouldn't have been stopped out. We came down to test the X leg down here, and we only spiked below it by maybe like 10 pips, if anything. So you shouldn't have been stopped out. But we came down here, we tested this X leg. This gave the real test for traders. I guaranteed a lot of traders either had stops too close and got stopped out, or they got scared out of the trade and just said, as soon as they saw this green candle on the way up, I'm just going to get out for minus 30 because minus 30 is better than minus 50. But for those traders who are disciplined, who are mentally tough, who stuck with it, market came all the way back to hit our initial target. And what happened is we were rewarded for our patience. And if you go on the trading view, if you just read the comments under this post, you'll see how excited those traders are that did that. And it's an eye-opening moment. It's one of those trades where it looks like the world is ending. We had a red candle, a bearish candle shoot all the way straight down, big momentum candle, sharp edge, whatever you want to call it. It came all the way down, testing your willpower, testing your psychology, only to come back up and hit your targets. Non-disciplined traders, stopped out for a loss. Professional traders who execute discipline, boom, we've got some money in our pockets. And for them, if this was your first time, it's an eye-opening experience. Again, it reminds me of a breakthrough trade I had, because the trade that stands out the most in my mind was a trade I had on Kiwi dollar. And I don't want to bore you guys too much, but essentially it was the first trade that I actually held profits to my actual prediction. In the past, I would always take targets off early. Why? Because I was scared. And I'm not going to lie to you. I'll admit it. I was scared. But it was the first trade where we took it. I was in a live room with Jason at the time. I took the trade. Me and about probably like 50 other traders took the trade. It was on like a Friday. The market had moved up about 50 pips in that one day. It was a big trade. Our targets were far away. The market had moved up about 50 pips, and then boom, the weekend came. And I remember we came back on Monday, and the market had continued rallying up to hit our target one, which had to be about 200 pips away. And Jason asked the question to the room. He said, "Hey guys, how about this trade? Nice, easy winner, right?" And it was like me and maybe a handful of people. "Yeah, man, 200 pips, stops move the break even. Can't wait for target 2 to get hit. Man, this is awesome." And I remember asking my roommate at the time. He took the same trade. I was upstairs in my room. I was, celebrating. I had the music playing, air guitar, and jumping up and down. I said, "Hey, man, how about that Kiwi? How about that New Zealand dollar? Big winner, right? Big winner." He's like, "Yeah, man." I said, "Well, what's the matter? We entered at the same point. We were trading partners, essentially." He's like, "Yeah, I took it out at 50 pips on Friday because I got scared." And there were about 20 other traders in our live room that did the same thing. And for me, being that trader that stuck with my original plan, stuck with my 200 pip target, and it ended up being like a 600 pip trade. But sticking with that target was the eye opener for me. It was the first time I was ever disciplined, and I was rewarded for it. And every time I think about making a mistake, taking a target early, I remember that trade. So for a lot of traders, this is going to be a similar type of trade. And that's why I want to share it with you. Out of all the trades we took this week, I want to share this one with you because it's a great reminder of how important discipline is. Now, aside from that, like I said, we took a bunch of trades this week. It was a pretty good week. I do want to show you one thing. And this comes from, I started managing a portfolio about 2 weeks ago, about August 15th. And we've had a pretty good run this week. And I want to show you some stats on it. Now, I want to show you this not because, don't worry about the dollar figure. This is based off, I think, I got to check. I think it's based off a $1,500 account or $15,000 account, not $1,500, $15,000 account. But don't worry about the numbers because numbers are different depending on money management, depending on your account balance. And as we mentioned in the live room, a lot goes into what you should be trading position size. It's not just, hey, my account is $10,000, so I should be trading 2 mini lots. A lot goes into it with the amount of pairs you're trading. How big is your portfolio? What is your maximum drawdown? What is your average loss? What is your biggest losing? It's a lot that goes into it. But one of the things I've been mentioning for a while now is that one of my flaws as a trader, is that maximum drawdown. And that's something I've been working on. Typically, as a trader, I get swings up, swings down, swings up, swings down. And for those who are looking to go into managing money, that's not what your investors want to see. They want to see a nice, smooth equity curve. They don't want to see a big drawdown at all. Now, my equity curve is pretty smooth. Month to month, it's pretty smooth. But during that month, day to day and week to week, it's kind of like that. So I've been working really hard just in case I decide to get back into money management seriously in the future, to work on a strategy where I'm keeping that maximum drawdown really smooth. And that's one of the cons about me. One of the things I'm working on as a trader, one of the things that I'm really good at is risk reward. And we had a conversation today in my live room about, I was showing him some statistics from 2012 and 2013. And one of our members was like, "Hey, it's pretty cool to see that you're only about a 50% trader. And you can still make such a profit." We had returns of like 42% and 39%, something like that. And, I tell you guys all the time, I'm not a high percentage trader. I'm probably at my best about 65%. But usually I range between 55 and 60. That's my nice little comfort zone. What I'm good at is managing risk. So that risk reward. And if you look at the trades within just this week, took about what about eight? Think about 13 trades. Let me count this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 13 trades this week, had 8 winners, 5 losers. But if we look at the average win is going to be 38. The average loser is going to be 31. That's very important. That average loser should be smaller than that average win. That way, even if you're a 50% trader, even if you're 50-50, if you take 100 trades, you win 50, you lose 50, you're going to be in profit because you're winning more when you win and you're losing less when you lose. Then every percentage point you get above that, if you're 50%, you're able to do that. If you're 55%, as you get better in the market, as you get more efficient, as you start to filter out some of those bad trades, learn from your mistakes and say, well, maybe I should wait for this, or last time I did that, this didn't work. As you increase that win percentage to 55, assuming you're keeping that same ratio between or where your winners are more than your losers on average, that's how you start growing that account. That's how you start growing that profit. But it starts with risk reward. It doesn't start with needing to win 80% of the time. You don't have to be an 80% trader. You don't have to be a 70% trader. You don't have to be a 60% trader. It starts with risk reward. What is your average win compared to your average loss? Then if you can increase your win percentage secondary, that's where you really see those big booms in your account size. So that's something I meant to mention in the live room today. I just forgot. So I figured I'd give it to you guys in a video. I feel like I'm leaving something out. I had some notes. Let me just make sure. Nope, that's track and field stuff. I guess that's it. It's time to hit the golf course. See how see if I can frustrate myself. All the stuff I just preached to you, it should relate directly to golf, but in golf, I'm a psychological wreck, and I disregard every rule and stuff like that. But it's okay. My hard-earned money isn't on the line. I'm not out there betting or anything like that. So that's it, gang. One thing I do ask you to do, please, I take a lot of time to produce this video. It is free. There's no advertisements on here. Although in the future, maybe no, there's no advertisements on here. I just do this because I understand that everyone's in a different point in their trading career and in their life, and that, all of you aren't able to take my training course. All of you aren't able to sign up for the syndicate. All of you aren't able to stay in the live room with me, even though I offer a free 1-week trial. That's my shameless plug. But do me a favor. If you like what you saw, just leave me a comment. All positive feedback is good. If you don't like it, just don't say anything. I got a comment last week. A guy said, boring. That doesn't make me better. So what was the point of wasting time writing that in there? I don't know. If you're going to be negative, just be constructive and negative so I can better myself. But please like it. Please leave a comment. Please share it. And if you are brand new and you enjoy this type of stuff, please hit the subscribe button. That way you'll be notified whenever my new videos arrive. Until next time, traders, plan your trade, trade your plan. I will see you guys in the syndicate tomorrow. I will see you guys in the live room tomorrow to end out our pretty good week. And the rest of you, I will see you next time I produce a video. So take care and good luck with your trading this week. All right, guys, I'm back for a little bit of a bonus. Now, I was just about to leave the office. It's actually been about almost 2 hours since I recorded the video. I've been editing it, and I was about to head off for my appointment at 4 o'clock. And I was talking to a trader on Skype, and I was following a pound-dollar trade we had in the live room today. Now, for you guys in the live room, you remember this. Essentially, it was a structure play. We've hit pound dollar a couple times, mainly on the 15-minute charts. We had an opportunity up here where we got short, made some pips on the way down. Market came back up, and really we've been in this channel. And today in the live room, we entered at this area right down here, expecting a move across the channel. I actually had my targets right up at about 65.88. And I bring this up not because it was a spectacular trade. It actually looks like an advanced pattern forming on here now that I think about it. I'm done day trading for the day, but we are going to have a Gartley pattern up here. 66.05. We did look at that earlier. X to A to B, B to C, C to D. Look at that. It's not the point though. The point was this was a small trade. I banked about 13 pips on it, and kind of the theme that I've been sharing with my live room members is it's not about. We've been doing more of an intraday style trading, just because how the range has been. I haven't been doing anything too long term, despite a long term position on Canada. But we haven't been doing anything too long term here. But I want to show that these little winners add up. And right here, I'm on the trade floor. This is the chat forum or the chat page, whatever it is that we have for syndicate members, where Jason and I will post ideas. Jason does his war room meeting every morning, so he'll do a video here, but we'll also post charts and kind of updates on what we're trading every day. And I just want to take a look at the last couple of days. Here was this had to be Thursday. This was yesterday. And just updates. So a few totals from today and last night's trading. Losers on Euro New Zealand minus 25. Loser on New Zealand dollar minus 20. Winners on Aussie CAD 23, Euro Yen 21, Euro New Zealand 25, Pound Dollar 12. And then we had another one for about 20 pips on Pound Dollar during the day. And then we look at today. Today was 3 winners. Just said hit my targets on. Where did I have it? I updated someone earlier. All right, right here, we had a winner on pound yen earlier in the day for 25. We had a winner on dollar yen for 17. I said plus 42 to start Thursday off. Yeah, buddy. This was right when the live room, about 8:30 this morning. And then I just hit pound dollar for 13. So if you pay attention, nothing seems too big. It's like 25 pips here, a little 15 pip winner there. But if you add them up, I mean, if you add up those small intraday winners, they turn into big profit. And if you look at the first day was what, 56 pips out of that first day with the winners and the losers. And then today was another 50 something pips. I haven't looked at the exact totals, but over the last 2 days, 100 pips off the market, all by consistently trading these small winners. So there's nothing wrong with that. There's a lot of people think you got to get in this trade and you got to hit 100 pip winners all the time. And that's just not true. Do they come? Yes. If you're good with trade management, if you're good with your analysis, can you, get a little, not inside information, but can you get a little heads up on when those big moves may occur? Yes. And that's what helps give us our home run months. But day in and day out, we got to consistently trade those small winners and just chip away at profit, chip away. And before you know it, we're having triple digit weeks. So I wanted to share that with you guys, because I thought it is very important. And a lot of our syndicate members are starting to notice that as they've been with Jason and I for the last few months, and some of them years. But for you guys that are YouTube that may not get to see the daily insight of what we're doing here in the syndicate, it's important that you guys understand that too. There's a lot of false information out there. There's a lot of false educators out there that will just create these standards to pump themselves up, to make them seem so good. And rookie traders come in thinking they have to live up to that. And it just ends bad. So wanted to give you guys that. It looks like Jason, I didn't even see this. First video of the new training course was just posted to the syndicate. Log into the new dashboard to see the trading. Yeah, training. All right. Nice. I'm going to watch that tonight. Jason's been doing a training course inside the syndicate. And he's promised to load videos up every time. So it looks like the first one is in there. So that, being a trading nerd, I've got my nightly leisure event. So just wanted to come back and tell you guys that. Sorry for holding you up some more. I've got to get out of here. Like I said before, plan your trade your plan. See you guys tomorrow.